Hello and welcome back to our second demonstration video dealing with Chapter 13. Chapter 13 we talked about corporations and how to issue capital stock. In the last video we looked at dealing with common and preferred stock. In this video we're going to look at problem 13-2B, which has to deal with treasury stock transactions. So what I did already was I went ahead and I took the information that they give us. And if you see over here on the right, I have common because they give us the balance of the common stock account as of January 1st, 2017 to be $400,000. Paid in capital in excess of par of common stock is $500,000. And the retained earnings is $100,000. Now, it's important that we start off there because remember, accounting, we need to keep chronological order of our transactions. So January 1, that's the balance that we start off with, right? So I set up the T accounts or the ledger, if you will, to reflect those beginning balances. Now we can go through and go ahead and do our journal entries, right? We have a number of journal entries that show that show us either buying back stock off the market or selling stock from our treasury stock account, okay? And so the first thing we need to do is journal the treasury stock transactions and prepare the closing entry for December 31st of 2017 for net income. And we could see that underneath those four journal entries, they tell us that, hey, net income, that's 80 grand. Not a problem, okay? So first thing we're going to do is do our first journal entry. And they tell us that on March 1st, oh, bear with me here. Okay, so on March 1st, oh, it should be 17, sorry, 3/1/17, we purchased 5,000 shares at $7 per share, okay? So we're buying stock off of our current investors. We as the company are putting in buy orders into the stock market to say, hey, I want to buy 5,000 shares of Hawthorne Corporation stock. Okay, it's going back into the treasury. So what are we doing here? Well, we're buying stock, right? This is our treasury stock. So I'm going to debit treasury stock for how much? Well, that's easy. 5,000 shares times what's the selling price? $7. Okay? So the treasury stock is going to be debited for 5,000 times 7 gives us 35,000. We're paying cash for this, right? Cash. And it's going to be the same $35,000. Now, for our explanation, we can say bought 5,000 shares treasury stock at $7 per share. Okay, now let's go ahead and look at, or skip a space, and now let's look at June 1st. What do we do on June 1st? Oh, why did I do that? Here we go. Okay, so we sold 1,000 shares at $10 per share. Okay, so what are we doing? Well, we're getting cash and our treasury stock is decreasing. So cash is going up. How much? Well, we sold 1,000 shares at $10 per share. So our debit is $10,000. Okay? So that's the cash we're getting in. What are we giving away? Well, we're giving away our treasury stock, right? How much are we giving away? Well, we're giving away 1,000 shares. But what was that original cost to us? Well, it was $7, right? Because that's what we originally bought it for. We're selling at 10, but we bought it at $7. So that means then that my treasury stock account needs to have a credit of $7,000. Okay? Now, the next thing we need to do is recognize that these journal entries do not match up. Okay? They don't, right? We need a credit to make this journal entry balance. So how do we do that? Well, first thing we're going to do is take the difference in the price from $7 to $10. That's a $3 difference. Okay? Times how many shares did we sell back? Well, we sold 1,000. So that should be $3,000, right? But what's this account number? Well, remember, we have this new account that we call, which is paid in capital from treasury stock. Okay? And I'm just going to go ahead and do the 3,000, right? What did we do here? We need to put some information to explain this journal entry. Well, sold 1,000 shares of treasury stock at $10 per share. And I'm going to say it had a $7 cost. Okay? And there we go. Okay. Skip a space. Now we need to do our next journal entry on September 1st, 2017. What did we do here? Here, we sold 2,000 of the 5,000 shares that we bought at $9 per share. Okay, so I'm going to do the same thing. What am I getting? I'm getting cash. How much cash am I getting? Well, I sold 2,000 shares at $9 per share. That should be 18 grand if my math is correct, right? So equals 2,000 shares times the selling price of $9 per share. That's 18,000. Where are we getting these shares from to sell? Well, we're getting them from our treasury stock. We originally bought 5,000. We sold 1,000 shares. That means we have 3,000 shares of treasury stock left to sell. Well, on September 1st, I'm selling 2,000 of those 4,000 shares that we have left. Okay? So, journal entry is virtually the same, right? I'm getting cash, 18,000. What am I giving? Treasury stock. At what value? Well, I'm selling 2,000 shares. What did I pay for them? I paid $7. And this is my original cost. Okay? So what's the credit amount? Well, that's easy. 2,000 times my $7 per share. That's $14,000. I have a difference here, right? That's okay. So what am I going to do? I'm going to go ahead and credit my paid in capital from treasury stock. And that's going to be the difference in the price, 9 times 7, or excuse me, 9 minus 7, which is $2. So I'm going to say $2 times the 2,000 shares that I sold gives me $4,000. Okay? Again, what did I do here? Well, I'm just going to explain this journal entry. Sold 2,000 shares treasury stock, had a $7 cost for $9 per share. Okay, so we're almost done. We got one more journal entry. 12/1/17. Guess what? We sold 4,000, or I'm sorry, we sold 1,000 shares of treasury stock at $5 per share. Okay, no problem. I'm getting cash. How much cash am I getting? Well, 1,000 shares, which is the amount that I sold, times my selling price, which is, in this case, $5 per share. Okay, so I'm getting, if my math is correct, $5,000. Now I need to book my treasury stock. Now notice I skipped the space. I know that I'm going to credit treasury stock. I know that I'm going to have to hit in my paid in capital from treasury stock account, but that's going to have to be a debit, right? How do I know that? Well, check it out. Treasury stock is going to be hit, or I'm going to credit that account for how much? Well, 1,000 shares times what my cost was. My cost was $7 per share. Okay, so I get basically $7,000. So there's a difference here, right? There's a difference of $2,000. So what I need to do then is debit my paid in capital from treasury stock. For how much? $2,000. Everything balances now. Okay. Now I got to do a final transaction. I need to close the income statement, right? So what am I doing? Well, let's think about it this way. This will be on 12/31/17. Okay, what am I doing? Well, I'm closing out my income summary account to my retained earnings, right? How do I increase retained earnings? I increase retained earnings with a credit. So I need to credit retained earnings. Okay, for how much? Well, $80,000. So that must mean that I know this retained earnings has to be credited for $80,000. That must mean that my debit is to the income statement for the same amount, $80,000. Okay, that's step one. Step two, I got to post all these. Okay, that's not a problem. So notice we have our common, our paid in excess, and our retained earnings, right? They didn't give us a beginning balance for treasury stock, and they didn't give us a beginning balance for paid in capital from treasury stock. We need to create those T accounts. Well, that's easy. I'm going to come down here. Actually, bear with me here for a second. I just want to move some things around. Because we did not hit these accounts, so they will not change. I don't need space beneath them to put in, my journal entries, right? So I'm going to go ahead and I'm just going to post the transactions that affect all these accounts, right? I'm not going to worry about my cash. Why? Well, because they want us to do the prepared they want us to prepare the stockholders' equity section for Hawthorne Corporation. Okay, so we're only doing the equity section. Cash is not an equity. They don't need us to keep track of the equity account or the cash account. So we're just not going to do it. That's okay. All right. So I'm going to go quick and easy here, right? I'm going to start off with posting my retained earnings. Okay. The next thing I'm going to do is I'm going to go ahead and create the T accounts for the treasury stock and the paid in capital from treasury stock. Okay. And then I'm going to do another one. Actually, I'm just going to copy and paste this. And this is going to be my paid in capital from treasury stock. Okay. So I'm going to go ahead. I'm going to go back to my journal here. And I'm just going to highlight this yellow just so I know that I already posted this. Okay. That's all I'm doing. Right. So the first thing we have is treasury stock. First journal entry, we bought treasury stock. So I need to post that. So I need to debit treasury stock for 35 grand. Now let's go back to our journal entry and let's look at our second transaction. Well, treasury stock gets credited for $7,000. I need to post that. My paid in capital from treasury stock from this journal entry, I need to post this. So paid in capital from treasury stock, we did a journal entry of a credit of 3 grand. I need to post that. So I'm going to go post it to my ledger. Okay. Same thing for September 7th. Or I'm sorry, September 1st. What happened? September 1st, we sold treasury stock. So our journal entry says that we need to credit treasury stock when we sell it. So we did that journal entry. I need to post it, right? So I'm going to post to my treasury stock this journal entry of $14,000. I need to, going back to that same journal entry, we credited paid in capital from treasury stock for $4,000. I need to post that to my paid in capital account. Okay. And then finally, we sold some treasury stock and we impacted our paid in capital from treasury stock account. So I need to post this. That's all. So I have a credit to treasury stock for $7,000. I need to post that. Okay. And then I have a debit for my paid in capital from treasury stock of $2,000. I need to post that. Okay. So now I can go ahead and total everything. Super easy for me to do. I'm just going to say, go to retained earnings, 100,000 beginning balance plus 80,000 of net income for the year gives me a balance of $180,000 in retained earnings. I got to do the same thing for treasury stock here. Okay, super easy for me to do, right? I'm going to take my $35,000 debit, and to that, I'm going to subtract the sum of all my credits. So I have $7,000 of treasury stock left. I need to do the same thing for my paid in capital. I'm going to do the same thing. I'm going to add up all my credits, subtract them from my debits. So I'm going to say equals that plus that minus my debit. So I have $5,000 left in my paid in capital treasury stock. Now the last thing we need to do is prepare our stockholders equity section for Hawthorne Company. Okay, so again, please pay attention to how we're setting this up. So the first thing I want to do is I'm going to come over here, and remember, I'm going to say, let's see here, and do 3. Okay, merge and center, left align, click and drag down. Okay, so I got all my spots. So the first thing I need to do is put in, what is this? What section is this? Well, this is my one heading that I need. Stockholders equity. Okay, come down one. I want you to indent once, and we're going to list our capital stocks. But you might say, well, wait a minute, we didn't hit our capital stock accounts in all our journal entries. That's true. But we need to take all the information they give us, start from the beginning, and then chronologically we move forward, right? So we started with balances, okay, in our common stock. So we have paid in, or we have our I'm sorry. This should be called paid in capital stock. Okay. Then we indent 3, 1, 2, 3, and then we list our stocks that we have, right? We have our paid in capital. So we have common stock that's associated with that capital stock. We have additional paid in capital, which is part of that paid in capital. And then we have retained earnings, and then we have treasury stock that we need to account for, okay? So I have my paid in capital stock. The first thing I'm going to list is my common stock. Now we need to list this properly. So this is what every company does on their balance sheet, right? When they have common stock, they list, we have common stock, what's the par value? If we look at the problem, we see that there is a $1 par value. Okay. How many shares were issued? Well, if we look at the problem, they on account okay, so we have 5,000 shares. That were authorized. Okay. Of that 5,000 shares the authorized, excuse me, how much of it is common stock? Or let me rephrase that. 5,000 shares were authorized. How much were issued? Well, we have 4,000, right, of common stock. So that's pretty much what we need to list. Authorized, 5,000, 400,000 issued, and outstanding. Okay. I want to go ahead and merge and center this. Wrap that text. One, two. Yep, we're good. 2. Okay. So now, the next thing we need to list is our additional paid in capital section, right? So we have, I apologize, this should have went in 3. Okay. So the next section we have is our additional paid in capital. So I'm going to indent twice. Additional paid in capital. Right? What do we have? Well, our additional paid in capital, we have in excess of par. So I'm going to list that. I'm going to indent 3, 1, 2, 3, in excess of par. And what's the dollar amount there? Well, that's easy. We already calculated it at 500,000. Okay. The next thing that I'm going to list is my additional paid in capital from our treasury stock. Okay. So I'm going to indent 3, and I'm going to type in from treasury stock. and I need to find out what's that dollar amount. Well, if I go to my account, my paid in capital from treasury stock is $5,000. So I have 5,000. I'm going to underline this. I'm going to come right over here and I'm going to auto sum these. Okay? $505,000. What is this? This is my total paid in capital section. So I'm going to indent 1, 2, 3, 4. Indent 4 spaces and say total paid in capital. Okay. The next thing I need to list are my retained earnings, right? So we have paid in capital stock, we have our common, we have our additions, additional paid in capital for both accounts. Now we're going to list our retained earnings. So I want to indent once, type retained earnings, and I need to list what is my retained earnings. Well, that's easy. I'm going to come over to my column P and I'm going to go find my retained earnings account and I'm going to post that balance. There's $180,000. Okay. So now I need to make a new total here, right? So I'm going to add my total paid in capital to my retained earnings and I get $685,000. What is this called? This right here is called my total paid in capital and retained earnings. So I indented 4 and I say total paid in capital and I'm going to abbreviate for RE, retained earnings, and that's my total, okay? And I want to go in one more because notice what I'm doing. I'm lining up this total account with that total account. See how they're indented the same number of spots? That's what we need to do, okay? So now I need to go ahead and subtract out my retained earning, or I'm sorry, need to subtract out my treasury stock, right? Okay, so what I'm going to do next is I'm going to go ahead and indent twice, and I'm going to say less treasury stock. Okay, so I need to figure out how many shares of treasury stock do I have left. Okay, well that's easy. I bought 5,000, I sold 1,000, there's 4. Okay, then I went and sold 2,000. So I had 4, I sold 2, that means I have 2,000 left. The last thing I did was sold 1,000, so I have 1,000 shares left. So I need to say 1,000, let my investors know that there's 1,000 of these shares at, and I need to put my cost. Well, my cost is $7. Okay. There we go. Text. Okay, there we go. So now I need to put the balance of my treasury stock. And my balance is going to be my 7,000. So now I can figure out what is the total stockholders' equity. So I'm going to indent 2, 3, 4 and say total stockholders' equity. Okay? And what does that equal? Well, 68.5 minus 7,000 should be $687,000. So I'm off a little bit compared to the book, and that's okay, right? I need to figure out what we did wrong, okay? So what we need to look at is, did we put everything in? Yes, we got our 4,000. Or I'm sorry, we got that's what I forgot. Merchant Center. I forgot to put in the value of our common stock. Okay. So now if I add all this up, now we're good. Okay. So I just forgot to put in a number. Now, I do want to mention one thing here. Okay. We said that we had 5,000 shares authorized. We sold 400,000, right? That's true, but we need to recognize that we bought back a certain number of shares, and we sold a certain number of shares. Okay, so if we want to see, so we need to adjust our issued and outstanding shares, right? We have 1,000 shares of treasury stock. Originally, there was 4,000 common shares that were out, right? We sold, okay? Or I'm sorry, there was 5,000, and yeah, we were authorized to do 5,000. How do I know that? Well, because they tell us that I apologize. The problem says that we have $400,000 in our common stock, right? What's the par value? The par value is $1. So that must mean we issued 400,000 shares, okay? We bought a bunch back, and then we sold a bunch, right? So we have treasury stock in our treasury that's not issued and outstanding of $1,000. So what we need to do is we need to say that how many do we have outstanding now? Well, we don't have 4,000 anymore, or 400,000. We have 399,000 shares still on the market, right? How do I know that? Well, because I took the total that we originally authorized and that was outstanding, 400,000. We bought some of those back. Then we sold some of those. We have 1,000 left. So I need to take the balance of the treasury stock, subtract that from the common. That will tell me exactly how much shares are issued and outstanding. Okay? So that, my friends, is problem 10-2. Probably as clear as mud. That's okay. If you have any questions, text me. It's not a problem. After you watch this, you try your homework and you're like, I can't figure it out. Not a problem. Shoot me a text. Okay? I'd be happy to set up a collaborate session with you, or meet you, before or after class on Tuesday and go over, any questions that you may have. Okay? So thanks for tuning in, and we'll see you in our next video where we cover problem 13-3B. Okay? So thanks for tuning in, and we'll see you back here in a little bit.